Arulselvan, who is the DEVP and CFO at Cholamandalam Investment, joining in on the show right now. Arulselvan, thanks. Morning. Good to have you on the show. Wanted to understand that despite a broad-based economic slowdown and liquidity issues in the NBFC sector, you managed to deliver good numbers in the first quarter. What would you say led to this kind of strong show?
Morning. See, the first quarter was a reasonably good quarter for us because as a NBFC, we didn't face any great liquidity pressures. So in the industry, there are pressures for some of the players. Also, more importantly, our product basket is quite wide and we could move around various products, like we could grow on the lights, we could grow on the two-wheelers, we could grow on the used business, which made us deliver a reasonably good growth in Q1. So we are confident that a reasonable amount of growth can still be clocked, and we are looking forward to close this fiscal with a decent growth.
The CV business, one of the mainstays of Chola. Are you getting a sense that month on month there is revival there?
See, hello? What is happening is the CV business, we are now going through 2 quarters where the base is very high, because last year the first 2 quarters were very high, and so this year it looks little slowdown. Yes, there is slowdown. Obviously, the heavies is going through a tough time. The lights have shown reasonably better, steadiness in their growth. So we are more concentrated on the light commercials, so we are able to still clock some growth. However, Q2 is going to be really a tough quarter, because Q2, what has happened is the monsoons and the lack of festivals in this quarter it will impact the growth across the industry. We are seeing tightness in the demand. But we expect the bounce back in Q3, because both festivals, Dasara and Diwali, happening in Q3. And the inventory levels have now come down drastically. The other factor you need to consider also is predominantly we are basing auto growth based on SIAM data, which is manufacturers billing the dealers. What has happened is in Q4 last year, a lot of pile-up of inventory had happened with the dealers, resulting in the manufacturers having to slow down, especially in the context of the BS6 coming up, and so they can't keep on pushing more stock down the dealer pipeline. So the dealers are been diluting the stock a bit slowly, but there is traction. Today the stock levels are less than 10 weeks stock with dealers predominantly. I hope you have seen the FEDA meeting conversations out there. So there is positiveness there, but also there is some amount of negative news. For example, the no truck for me type of a stance taken by some of the large players. However, if you look from Chola's angle, Chola is purely concentrating on the SRTO segment, which is more than 75-80% of the total vehicle population. So whatever these moves are only by big players, so the small players still find some utilizations, especially if they are general purpose carriers, so they can always find work for their vehicles.
What will happen to the entire environment for NBFCs when cost of borrowing is going higher? It may not be a problem for Chola, but that's a problem for NBFCs, that they are not getting fresh flows. That's one side, which is on the borrowing side. On the lending side, banks now will link their loans to repo, which means that their rate transmission will automatically start. So what would be the USP for a NBFC now?
The bank's movement to repo is still to happen. Yes, I think there is a directive that it should happen from October 1st. The problem with banks able to participate in the segments which the NBFCs are playing is not because of rate. If that has been the case, banks would have already taken up all this demand. The primary strength of the NBFCs is in the collection mechanism that we run. That is what the banks lack. because they don't have the wherewithal to do such a low transaction value, high intensity of transaction, because these collections don't happen on its own like a salary account or like a big, freight carriers where they will have working capitals where they can monthly debit their EMIs, etc. Here here somebody has to run down and meet the customer and collect it on a month-on-month basis, sometimes even visiting them more than once in a month. For this transaction size, banks don't find that viable. That is the strength, or that is the USP of the NBFCs, which makes them able to go down to the last mile and deliver.
We also learned that you're looking to expand your presence in the home loan segment. What kind of growth are you seeing there? Where do you see exposure rising to, and going forward as well, if you could just tell us, in terms of strategy, where your focus will be with regards to different segments as well?
So the home loan, we are focusing on the affordable home loan to SMEs. If you look at our business profile, we have been handling SMEs for the last more than 12 years when we were extending loans towards loan against property. So we know how to assess the income of the SMEs, their cash flows, etc., to understand what is their earning potential and against which we lend them. The housing loan book is also built on the same premise, albeit to a slightly lower level of MSME customers, because the ticket sizes are lower, they'll be in the range of 15 to 25 lakhs. So the primary strength is in assessing the cash flows of the customers, which is not so transparent. So how do you do it? How do you assess their business potential and cash flows over the next few years is what matters, and that is the strength. And now we have been running this home loan, the affordable home segment, for the last 5 years, and we have been testing the market for the first 3 to 4 years. So there we are not scaled up, and now we are confident, and now we are scaling up, and that's again the reason why we are wanting to go in for an HFC license.
Okay, good to hear that, and good luck with that. Thank you so much for taking the time out and speaking with us today.
Thank you.